has been tabled, and growth seems to be the priority of the finance minister. It's a pro-poor, pro-middle class, and a strong budget which will ensure that India indeed will take the leap forward. The first C, the finance minister has walked on the path of fiscal consolidation with the assumption of a fiscal deficit below 6%. Second, massive increase in capital expenditure, which will create the multiplier effect for the economy. Third, tax rates, big relief for middle class and every taxpayer in the country. Fourth, no changes in the capital tax regime. LTCG and STCG remains firm. So this budget is an extension of the template what the finance minister has maintained. It is about taking the economy on a different leap. Markets, I'm going to mark the markets for you. Let's take it out. Let's look at Nifty, the Sensex, the Bank Nifty. No new tax and a tax rebate. Indian taxpayers will have more money in their hands. And Aisha, this is exactly what everybody thought. The tax rate cut is a surprise. The consolidation on the revenue is brilliant. The whole assumption that
Nikunj, there you go. I think this graph says it all. It's a almost 200-point move that you're seeing in the Nifty. No mention of capital gains, and the markets are clearly breathing a sigh of relief. And like you said, it's a pro-growth budget, right? More money in the hands of consumers, and that's exactly what the markets wanted.
Everything.
And a very, very big capex outlay.
Yeah, everything is more, which is more tax cuts, more fiscal consolidation, very conservative revenue, and a very strong outlay in terms of capital expenditure, which is really creating a multiplier effect.
Absolutely. It's an 800-point move that you're seeing on the Sensex right now, 200 points up on the Nifty. In fact, I just want to quickly look at some of the gainers as well. What an L&T, what an ICICI Bank, what a Maruti, the entire auto pack, and ITC. We will talk about that stock in just a bit, what these stocks are up to and what's really contributing to the Nifty move right now. There you go. ICICI Bank, although it was strong, Nikunj, going into the budget as well. So that has looked strong. Maruti Suzuki, not as much of a move coming in on the stock. But let's just bring up all the gainers in today's trading session and tell you what's really powering the Nifty right now. Nikunj?
You know, Aisha, you have to look at the context here, which is what is important. Budget is also about the continuity, which is the first, the continued consolidation. Second is the productive capital outlay, which is great. And every taxpayer will have more money in their hand. Nobody expected the peak surcharge rate actually should come down, and that actually has happened. Shashank Srivastav is ready, Nilesh Shah is getting ready, Vijay Kedia is about to get ready. Whom can we go across to? Okay, Prashant Jain, so nice to have you back. Prashant, how would you greet this budget? 8 on 10, 10 on 10, or 11 on 10?
11 on 10.
You know, I have never seen Prashant smile ever.
Exactly. 20 years, Aisha is saying that even when your NAVs were in the top quartile, you never laughed so much with HDFC Mutual Fund. You're smiling after the budget. It's a photo op moment for us, Prashant. You indeed like the budget. I can see that.
No, I think it's a great budget, Nikunj, because capex is up sharply, which was very good. And fiscal consolidation has been reiterated, which again I think is extremely good because India's common debt to GDP has moved up sharply post-COVID. So I think we should be able to moderate that. There is stability and further simplicity in taxation, which is liked by everyone, individuals, businesses. And a lot has been done to further promote domestic value addition, manufacturing, tweaking in custom duty rates, I think is supportive of that. And I also think the assumptions behind the budget are quite reasonable. The tax growth, the revenue growth is reasonable. I think what is probably helping this year a bit is the likely sharp fall in subsidies on fertilizers. So net, I think it's a very good budget to my mind.
Once again, remember, in the run-up to the market, in the run-up to the budget, the markets were nervous. The markets were puffy-duffy. Lot has changed in last 24 hours. Adani FPO has sailed through, but now the center stage of the market We'll go back to one, relief, nothing on the capital gains tax. Second, C, capex outlay very strong. Third, the revenue growth assumptions are very conservative and realistic, looking at the bent of the economy. And number 4, I guess, is the path of fiscal consolidation. Shifali is ready, Vijay Kedia is ready, Nilesha is ready. Who wants to go first? Let the lady go first. Yes, ma'am.
All smiles. I think much more than what we were expecting in the budget, especially on the personal tax side.
What is that much more?
I'm sorry?
What is that much more?
The much more, of course, in terms of the relaxation of the slab rates and the surcharge. Getting it down to this level was not expected in the current budget. So definitely a big plus. And overall, not tinkering with the rest of the changes, right? I mean, the corporate rates left untouched. Relaxation for the startups was also hugely positive. And lots of good stuff for the gift city as well. So I think all in all, they've taken care of all the soft points and done what they could in this last full-fledged budget. So,
yeah, absolutely.
Finally breathing a sigh of
relief. This is massive. This is massive.
Yeah.
I think this is a super budget. It's a lot more than what we could have bargained for.
Just super or super duper?
It's a super duper.
A super duper.
In my words, Tor-4 budget. Okay. I think it's a very responsible, progressive budget. Okay. Lowering taxes for all sections, I think, is a big move. I think this is a big move in terms of taking India forward. The initiatives on technology, digital, setting up centers of excellence for artificial intelligence. I mean, look at the whole narrative of the budget. A budget 10 years back, a budget now, and a budget which is now really looking ahead. Setting up physical and digital libraries for children in villages. I think this is massive. This is not about setting up physical infrastructure. This is about setting up intellectual infrastructure for the future. This is making India a much more stronger and a modern economy. And this, I think, is the big takeaway of this budget.
Vijay Kedia, dhamakedar budget?
Yeah, I think it is 10 out of 5. It is not 5 out of 5. Because I was expecting that they are going to tinker with capital gain tax. So the tenure has not been increased and tax rate has also not been increased. So of course it's a Diwali, it's a bumper Diwali budget kind of budget.
For the first time, in the longest time you and me have tracked budget, you've seen the aggregate tax rate for HNI and ultra HNI go down. Normally it's always that, the rich are earning more, tax them more because you need fiscal, you need more revenue.
More money, yeah.
So this time around, even though this is about 1.5 years away from the election cycle, the first time the aggregate tax rate has come down. Just shows the mindset of the government in terms of how confident they are about the bent of the economy and about revenue buoyancy. Because fiscal deficit, if it comes down and if assumptions are normal, that means the government is very optimistic about where they feel the tax collections are moving. Would you agree with me, all three of you? Is that the main crux of this budget?
Oh, absolutely. I mean, absolutely. I think it clearly shows a lot of conviction and a boldness on the part of the government to assume that clearly taxes are going to keep rising and the ability to lower taxes and still have higher taxes, which means that the government seems to be very confident on growth, which I think is a huge message to investors and to markets and to business and enterprises.
In fact, Prashant, I think what stood out for me from a market perspective was the capex outlay, Prashant, which has been outlined, right? I mean, a mammoth 10 lakh crore rupees, effective capex at 13.7 lakh crores, railway capex at almost 2.5 lakh crores, and this is something that the market would like.
No, absolutely. I mean, if you see last 5 years, the capex is up almost 3 times. It was 3 lakh crores in March 19 and 10.5. So I think this is extremely good because private capex is still sluggish. I think it will pick up, all stars align, but still it is sluggish. So I think government capex, I think, is the need of the hour.
So Prashant, can you identify now the clear set of winners based on this year's budget? One, the relief on the capital gain tax. B, the complete intention of the government there, where they want to spend and how they want to spend. Given that this market has been volatile, do you think this budget now, the clear set of outperformers will emerge clearly?
Positive for all sectors because it gives more money to consumers, which means more consumption. Capex is clearly good. And higher GDP growth is very positive for banks as well. And of course, it does not impact the IT sector. I mean, that's the very nature of it. I think broadly this budget is positive for all. I think banks are also offering reasonable value compared to the consumption-oriented sectors. So I feel that could probably lead this market.
And Nilesh, Vijay, is if you're spending more and if you are giving more money in the hand of taxpayer, that means there is a word which we always fear will come back. Guess that word. Inflation. You will stroke inflation because of this. You will stroke inflation because of this when the world is struggling with inflation. Indirectly, this in a sense could stroke inflation.
No, I don't think so. This will not stoke inflation. I think inflation is more dependent on global factors. It's going to be the prices of crude, commodities, coal. Those are some of the things which are going to drive inflation. I don't think lowering taxes and leaving more money in the hands of consumers is in any way going to stoke inflation. I think the bigger issue to address is essentially demand, to revive demand. Demand which was turning a little subdued. I think these initiatives of the budget will revive consumer demand. And I think that is going to be the big takeaway of this budget. It's not going to be inflation.
I must admit, the big takeaway is, guys, the Nifty futures are now almost 250 points higher. We're sitting at the top of the day. If we can just bring up the intraday graph of the Nifty here, we're up almost 1.5%. We're back at 18,000. 18,041 is where the Nifty futures are right now. The Nifty 50, there you go. The spot Nifty is higher by about 271 points. And it's a breakout on ICICI Bank. That's the one which is really leading the Nifty moves right now. 3.7% up on ICICI Bank futures. Tata Steel is holding higher by 3%. L&T has shot up almost 3%. Eicher Motors up 2.5%. HDFC up 2.5%. And Kotak Bank as well higher by 2.25%. So this is literally, Nikunja, salute from the markets to the finance minister.
Aisha, markets are all about expectation management. The point we were discussing that in the run-up to the budget, markets were
so light.
It was fair. It was more than the positioning. It was light. Positioning could be a function of the mood. But because of what happened to Adani group of stocks and PSU stocks, the market were in a grip of fear. Yeah. And when you have a market which is in grip of fear, and when you get a blockbuster budget like this, that is going to, force the bears to run between their tails. So for me, the punchline is, post the budget, the bears are running with tail between their legs. Kedia Saab, short seller दुम दबाकर भाग रहा है.
दुम दबा के भाग रहा है.
शॉर्ट सेलर भागे वो कोई बात नहीं है, ये समझने का कि एफआईआई अभी क्या करती है अभी.
Very pertinent.
वो that is the most important factor.
आएंगे, वापस आएंगे और कहाँ जाएंगे, यहाँ नहीं आएंगे तो.
तो अभी वो मेरा एक ट्वीट था ना कि माल किससे लेने आएंगे, ये अभी मालूम पड़ेगा कल आपको. कभी उनको माल मिलेगा कहाँ से बाजार के अंदर.
Okay, anything in the fine print, Shefali, which stood out for you? That tax on ITC. Anything else which is in the fine print?
Tax changes, I think largely even the focus on the dispute resolution, adding 100 more joint commissioners. I think this is again, path breaking. And that would really reduce the backlog of cases which are pending. So generally, the focus on ease of doing business, making it easier for the taxpayers, the grievance redressal system, I think all of that is hugely positive.
This time around, Diwali in India is celebrated in October, November and Christmas in December. But looks like we got a Diwali before Holi this time. That is what markets are telling us, Asha. Look at the surge in the market, 266 points, from the day's low. I think the market in a sense been talking about this breakout. Has the breakout realistically happened? Prashant Jain, will anything change in the way you have approached your portfolio? Looking at the budget now, which is pro-poor, pro-middle class, great for HNI investors, HNI taxpayers, and a clear focus on moving away from freebies to multiplier effect by spending capital expenditure. Will anything change in the way you manage money and the stocks you will choose from here? Prashant Jain.
No, Nikunja, I think to my mind nothing changes. This is supportive of capital expenditure, supportive of consumption, supportive of growth, supportive of local manufacturing, no tinkering taxes, and as Mr. Puri was saying, it focuses on improving ease of doing business, simplifying taxation, reducing logistics costs. So I think, to be honest, nothing much changes to my mind.
One point that Vijay Kedia has well raised, that FIIs have clearly left our markets in the month of January, right? Of course, many factors at play. Point in being a lot of emerging markets, a lot of beaten down markets like China, Hong Kong are giving you much higher in alpha. But what would it take for FIIs to return back to India?
While no one knows exactly, but I mean, the point is that India is offering a very compelling proposition. This should be the fastest growing economy this decade. Our political stability, improving business conditions, improving ease of doing business, stability in taxation, promise of growth, transparency, I think all of these are supportive, and FIIs should come back at one point of time, though I think we should disregard this monthly, quarterly flows, because if some other market has become a lot cheaper, India has outperformed massively, some money could go out. I think one final point here, if you look at between last September to June 22, FII sold close to 30 billion US and markets stood extremely firm. So I think the impact of FII flows is probably going to moderate, and therefore the volatility of Indian markets going forward should be lower to that extent. It should not swing too much to FII flows, and that I think is a structural positive.
ITC, and that's the power when markets reverse. ITC, where the tax has not gone by but up to. That's the clarification which is important. The tax has gone up to. It's not by. So it's not a 16%.
Minuscule tax.
Exactly.
Our FMCG analyst was telling me that it's only 40 paise on every cigarette pack.
That's manageable. So that's the reason why the stock has gone up. The other aspect which I want to bring out is that while we're talking about capital expenditure, let's also talk about the fact that there is going to be a substantial saving for taxpayers. Now we can argue about the quantum, but when typically small tax savings are done, it tends to have an impact on small ticket items, autos as a cluster. So where is Maruti, where is Hero MotoCorp, where are some of the FMCG stocks? We're talking about investment banks, but Maruti ko bhi benefit hoga.
Hotels and aviation stocks are the ones which are actually on fire. I was just looking at Indian hotels. I mean, yes, more money in the hands of consumers and at lower income tax slabs rate, but who's spending? It's actually urban India, Nikunj. We've seen that in the last year as well. Look at Indian hotels. Of course, a lot of it has got to do with the kind of blowout earnings that they had, but it's at the day's highs. It's an 8.25% move that you're seeing on IHCL. Look at some of the aviation stocks, namely, of course, only Interglobe Aviation. I'm going to come to you on that. I know you're smiling.
I saw you typing something during the budget speech.
A trend.
Yeah. No, that's Interglobe for you. Okay.
No, Chalo, that's not done as much, but a trend, or for that matter, most of these niche consumption names, urban consumption names.
Sunil Singhania is also ready. Let's say hello to Sunil Singhania. Sunil Singhania, we are getting everybody to rate the budget. The most optimistic number I've got is from Prashant Jain. There you go, you can see him. He's given this budget 11 on 10. What is your rating? He's making maths look slightly different this time with this budget, let me tell you.
I'll have to, go above Prashant. I'll say 20 out of 10. But jokes apart, I think this is a budget which I call the 4S, It is simple. It is short. We didn't have a 2-hour speech. It was very crisp and short. It is focusing more on the structural bit, which we talked about in the morning. And fourth is it has brought smiles all over. So I think I would say it's a 4S budget going in from your 3 C's which you're talking about in the morning. And I think it couldn't have been better. And it's allayed a lot of concerns. It has been very, very thoughtful. Obviously, we still have to read the fine prints. But the way it was presented, first on fiscal prudence, second on the corporate side, third on the structural side, and then on the personal taxation side, I think, you couldn't have asked for more.
He sees into 3 Gs. Do you want to guess? Great,
Growth,
grand, growth. So this budget, in a sense, is the 3 Gs which are going to be important. So Sunil Singhania, if I make your 4S, then I'll add 2S on that, which makes it 6. And my 2S are Sunil Singhania stocks post the budget. How about that?
He promised us that, Sunil. We remember that, and now it's a good budget, so let's have the list.
No. So I'm constrained, whatever way you ask, and, you have a lovely smile, but I still resist not going into stocks. But Nikunj, I think we always get into this thing about looking at stocks and this and that. I think, as I said earlier, the biggest stock to buy has been India, and if you look at good funds, they have grown like 100, 200x. So obviously there will be some sectors which will do well, some sectors which will not do well from time to time. You mentioned about a cigarette company; it was down 6% and now it's up to 3%. So, let us not go into a very knee-jerk kind of reaction based on what has been announced today or tomorrow. Ultimately, when an investor invests in stocks, it is from a 3-4 years perspective. So look at the structural side. I think the full focus has been, a massive $120 billion plus on infrastructure, which is like 10 trillion rupees. It's up by 33%. Almost 40% of that is going into the railways. A lot of focus on road building, a lot of focus on other infrastructure building. There has been an increase or an extension of low tax rate of 15% for new manufacturing companies. So I think the thought process is very clear. And, if you believe that this government is going to continue for another term, I think we should be just extrapolating this from the next 5-6 years perspective. And I think the road from 3 to 6 is now looking very, very near. And I think that should be the focus.
Prashant Jan, I go back to that same point which I think I alluded to Nilesh and to Vijay Bhai, that the challenge in the world, Prashant, is inflation. And it is a global challenge. You've discussed in the past that the era of low inflation is over. This budget will stroke consumption, it will revive investment, and it will kickstart a new growth momentum. Don't you think at some point in time, whatever has been done in this budget could also stroke local inflation? And that, in a sense, could be the biggest challenge for the market, not this quarter, next quarter, but second half of this year?
So Nikunj, it is, possible, but it is extremely hard to forecast inflation. I think the challenge in the West around inflation is coming from slightly different sources. One is the fiscal stimulus, the monetary stimulus in the West was a lot more. And what the households got in US particularly, I think was close to 15% of GDP. So India did not create that kind of excess at all. And that's why in US the consumption expenditure is extremely strong, where it is more muted in India. So to that extent, I don't think it is, you can extrapolate what is happening in US out here. And second is, I think in US, the demographics is quite adverse. The working age population is not growing, and therefore the wage inflation is quite strong, which is clearly not the case in India, because we add a lot of youngsters to our workforce every year. In fact, we need to create more jobs. So I don't think this is an inflationary budget. And if you also recall what she said, the FM said that about 40,000 crores roughly is the loss of revenue by these tax proposals. That's about 5 billion US. 5 billion US on a 3 trillion economy is nothing very significant to move the needle. So I don't think, inflation may come back, but I don't think it should be a result of the proposals in the budget.
Okay, I'm just going to mark the markets. The rise in the market post-budget continues. The rise in the market post-budget continues. I want to mark Bajaj Finance here and some NBFCs. Logic is simple. More money in your hand, NBFCs will give you more money. More consumption, you will borrow more. More corporate capex, that means private corporate-facing banks will do a cartwheel. So ICICI Bank is moving higher, but along with ICICI Bank, Bajaj Finance is also climbing gradually at the highest point of the day. So Nayantara, I think it's a perfect cue perhaps to take it over and ask Mr. Bajaj, more money in the hands of taxpayer means more ability for NBFCs to lend loans.
And with that, I'll introduce Sanjeev Bajaj, the CII President and the top boss of Bajaj Finance and Bajaj Finsa. I felt like what we were chatting before the speech, all of it came through. So I don't know what kind of a hotline you have with North Block, Mr. Bajaj, or what CII does. But the point that Nikunj was making, this is a budget which is growth-oriented, which is going to give a big fillip to consumption.
Very much so, Nayantara. And not only is it a strong growth-oriented budget, but one that has also balanced the Fiscal Prudence Act. And some of the key recommendations that we just discussed earlier this morning, as you were saying, one was to take public capex to 10 lakh crore. That's exactly what has been announced. Second was to spur consumer spending by rationalizing taxes, especially at the middle class segment. That has again been announced. In addition, the focus on improving productivity and efficiency in the entire agri-supply chain, that's a welcome move as well. We've also seen increased allocation for various elements of the green sector as we move on the energy transition side, and the support overall to the masses. So this is a budget that is growth-oriented, that is positive, and that is what a number of those recommendations were as suggested by us at CII.
So India will leap ahead with this budget, seems to be the verdict that is coming in from India Inc. and all the market experts. It's early days, but that seems to be the verdict that's coming in.
Very much so. We have to, of course, see strong execution of that. For example, if you see the focus even on urban infra and the support being given, whether to MSMEs, whether to state governments with the additional 50-year interest-free loan, which has to be consumed in the next 12 months.
Yeah.
So there are timelines towards achieving that as well. And we think each of these enables create a better India, better place to live, a better place to work, and a more efficient place to work.
Do you predict a significant jump in credit offtake across NBFCs and banks after all that has been announced today? Because we all are going to have more in our hands, hopefully.
Keeping in mind that we expect, say, a stable external environment, very much so, you will start to see the, I would say, the force multiplier effect of these positive moves in the coming quarters.
Because it's not just a lot of announcements that were made around banks as well, but it's also being backed by cuts in customs duty. You've seen changes in indirect tax. And if you look at all of the items, these are all household, high consumption items.
And there are items where India is focusing on manufacturing that for India and the world, which is what they've done, the rationalizing of customs duty structure in a number of items, removing the inverted structure that existed in certain products or sectors. Each of these will go a long way in helping make India the manufacturing base for itself and for the world.
Mr. Bajaj, correct me if I've got the analysis correct, and this is just my personal analysis. The announcements that have been made, whether it is to do with PAN, the single KYC, isn't that going to help financial services players like yourselves to onboard new customers, or maybe rival firms as well? Isn't this going to really help the financial services industry?
Quite significantly.
And the penetration?
Quite significantly, because it improves access, penetration, as you're saying. It improves by reducing friction in repeatability. When a customer comes back for a second financial transaction, a third financial transaction, it will make life much easier by ensuring that a common simplified KYC across regulators ensured. It will also make life much easier whether for provider or for those that are accessing financial products and services across different asset classes and different regulators. So these are all again steps for easing business, easing life for the consumer.
I have to ask you one about the super rich tax, right? Time and time, every year we were waiting for that one. But today the finance minister is saying it was the highest surcharge in tax on this planet, being brought down now below 40%. What can the HNI and ultra HNI do to boost consumption and give a fillip to the economy?
You know, more than anything else...
Will it also prevent immigration?
Well, more than anything else, it's a welcome surprise. It's not about the money that is being saved. What it says very clearly is that this government is benchmarking our competitiveness across other major economies to ensure that we stay competitive at all segments of the economy. And that's a very welcome thing to see.
I started the interview by saying the CII have a hotline with the finance minister. CII predicted a lot of PLI schemes. That did not happen.
You know, we will continue doing that. And I believe that a number of these moves don't have to wait for the budget. If it's not come in the budget, if the rationale is right, the government is always open to evaluating these.
Okay, now before I also let you go, I asked you to rate how cautiously optimistic you were. That was before Ms. Sitaraman's speech. After the Madam Finance Minister's speech, how optimistic are you? You were 7 on 10 before.
I was cautiously optimistic earlier. I am very much enthused in being very optimistic now.
10 on 10?
I won't rate. I think numbers end up vitiating what one is trying to do. But a great set of announcements, a very strong budget, strong execution is what we need.
And with that, Mr. Bajaj, I'd like to thank you for giving us the time. The first reaction, I know you have many, many more interviews to do after this.
Thank you.